Little Zoom action today. Oof. Fix this. There we go. Hey, everybody. Lawrence here, as always, weekly Thursday. What are we? July 2nd. Nice to be with you tonight. Just see if I can turn this just a little bit. There we go. Good evening, everybody. For anybody that hasn't been on the stream before, this is where we talk about all things peer-to-peer lending and investing. A few things this week. It's been an interesting week. Hope everybody is well. I'm sure you've seen the crazy news reports coming out from the good old United States of Mr. Trump, where the coronavirus reports have been, let's say, rising up like Mount Everest rose up during the volcanic eruption, maybe, that caused it to be there. I don't know the history of Mount Everest, but the coronavirus cases are rising in America, and it's no surprise. But anyway, I digress with that. It is a very stormy day here in Florida tonight. This afternoon. So if you hear some booms and flashes, it's probably lightning. So hopefully the stream won't crap out on us tonight. And we have the return of Chica Boy. I hope I say that right. I don't know if it's Chica Boy or Chica Boy. Chica Boy, you are the VIP this evening, and glad to see you here. We were starting to get a bit worried about you, Chica Boy. But hi everybody. Hi, Alan. And nearly sunny Basingstoke. Philip, Milton Keynes, Colin in the Peak District. Chica Boy, of course, our VIP from Folkestone. And Mark Mason. Hi, Mark. Nice to see you here. Peter and Leatherhead. Derek Thorpe from a drafty. I haven't heard that word in a long time. Drafty. It's not a word I use anymore. Drafty, North Devon. And Paul and Kenilworth, Steve, Manton, Solihull, Birmingham, where my grandparents are from Moseley. John, thank you for the nice words about the shirt. I was feeling a little bit tree tonight. I don't know. This is, I think, fern leaf, so I thought I'd shove the shirt on. Hi, John in Nottingham. Sue, thank you for the compliments on the shirt. Hi, Mr. Smith. Hello, Mr. Accrington. Nice to see you. And Trump is going to wear a mask because he looks like the Lone Ranger. That's interesting. Hi, Arthur. New lighting scheme. Excellent. Thank you. I've been really trying to work on getting the stream quality better because I've seen other YouTubers and their stream quality is really high. And I seem to have this fuzzy noise of the camera. I quite haven't figured that out. I think it's just lack of lighting in this room. But if I open the window, then the light probably won't be as good. So improving, and we'll get better. Hi, Stephen in Nottingham, and Chris in Wickham, Hampshire, close to where I'm from, down in Poole in Dorset. Derek in sunny Connecticut. Thank you. Thanks, Chica Boy. I'm glad that the sound is good. So we have a lot to get through. We're going to run through the weekly news like I always do. And what are we talking about this week? We're a little bit of rate setter news. Some assets capital, some funding secure recovery loan information, some loan pad, crowd property updates, and we're going to talk about the savings rate and what's going on with that, what you should do about that, and just the general state of the economy, which seems extremely disconnected from the stock market. And by the way, I think I have figured it out, why we are so disconnected between the stock market and the economy. I'm going to share some really funny things with you about that. Involving a Reddit thread and membership group that is very large, that I believe is wholly affecting large parts of the stock market around the world. I say that tongue-in-cheek because it's probably not the case, but it could be. So we're going to chat about that tonight. And some other bits and pieces of news, particularly interesting, but... So if you have any questions, pop them down there in the comments. I don't know where I'm pointing to, but put them in the comments. Ask me whatever you want to ask me this week. It doesn't matter. I'll give you any opinion-based advice that I can. Well, actually, technically, it's not advice. And let me read my weekly disclaimer that you absolutely should never listen to anything I tell you. I say that tongue-in-cheek again, but the information provided is not financial advice and has been prepared without taking your objectives, financial situations, or needs into account. You should consider its appropriateness for your circumstances, Chica Boy, and everybody else. All investing carries risk. Opinions expressed in this stream are opinions based on my own personal experiences. And remember that the wonderful FSCS does not cover peer-to-peer lending investments, and your capital is always at risk. So please don't invest anything more than you can afford to invest. Hi, Annabelle from Sherborne. Yes, it always seems to be soggy in Sherborne. It doesn't really make me want to visit it, but glad you're able to join us. Hi, Mike. Nice to see you here, and George and Bridlington. I always like to give everybody, their due hellos, because it's you're spending your time to come and listen to me ramble on for an hour, hopefully not too much more than an hour. So I appreciate that. So that's why I sort of say hello to everybody. But please hit that thumbs up if you can. There's 42 people on here tonight. We got 15 thumbs up so far. See if we can get it to 42, preferably 50 if more people join. But it helps me out with the YouTube algorithm. Hopefully you get lots of value out of this YouTube stream that I put on every week, just to keep you updated. And that was the fire alarm battery, which is low, so apologies for that. Yeah, hit that thumbs up and subscribe to the YouTube channel. We have 521 subscribers now. My goal is to get to 1,000 by the end of the year so I can monetize the YouTube channel, which I cannot do until I hit 1,000 subscribers. As always, please join the Funding Secure Action Group. Keep up to date on the debacle that is the Lendy situation, and the people over the Action Group are helping us out immensely. There we have the first one was the Funding Secure Action Group, and the second one is the Lendy Action Group. And if you want to join the Facebook group, if you haven't already, I recommend that you always join the Facebook group, because we have a lot of fun. And Chica Boy, I hope you're in the Facebook group. I'll be very sad if you weren't. Yeah, so join that, and that's the announcements for this week. So let's get right to it. There was a news report this week about Assets Capital, how they have seen defaults minimal as they see a bounce back with their return rates. Mr. Stuart Law, always the very optimistic, positive one. I'll read it to you if you haven't seen the report. It's on the peer-to-peer finance news. It says, in a monthly update to lenders, Assets Capital chief head honcho and elf Hefe Stuart Law said that over the course of June 2020, the platform saw a further and final substantial catch-up in borrower payments that has become overdue as a result of COVID-19. As a result, investors who hold a manual lending account, such as probably some of you do, and I do too, that they will have seen a bumper interest payments. I'm not really sure what that means, but they've seen a bumper interest payments last month, while access account holders will receive their full advertised target interest rates by today, which was being July 1st. Personally, my manual lending account interest rate has, this is not a XIRR rate. This is purely what Assets Capital puts as a return rate, has jumped from 8.16% to 9.2%. At the end of the day, those rates really don't mean anything, because it's going to see what happens over the next 6 months to a year before we really know what the effects of this coronavirus madness are. But it's nice to see the rates have bumped up a little bit on the manual lending rates. And the news report also said the lender update also confirmed that Assets Capital has begun the testing phase for its upcoming Access Accounts marketplace. If you don't know what that is, they're going to have a secondary marketplace where you will be able to buy and sell your Access account pieces or whatever you want to do to exit out. They are planning on that being launched at the end of July. If I had to take a guess, I would probably say more in August, but that's just a hunch. It says this marketplace will allow Access account holders to make faster withdrawals by setting a discount on the loans that they wish to sell, And Stewart says, we aren't anticipating high discounts to be required to accelerate withdrawals, but the marketplace will find its own level as all trading of loan holdings will be set by investors rather than ourselves. So my view on that, I love you, Stuart Law. I think you're a great guy, but I absolutely think that people will start discounting their access account loans because they'll want to get out. Some people, not everybody. Every other platform that has a discounting way to exit loans has seen discounting. I don't think you're going to see anything different at Assets Capital, but there's the positive thinking. As I said, Stuart is always the optimist. But it'll be nice to have an option if you do have excess loans that you'll be able to hopefully get out of them if you want to. So that's the Assets Capital news this week. What else? We have 2 new CBILS approved government lenders, which are joining our friends over at Funding Circle, and also Assets Capital is being approved government-backed CBILS lenders, which are folk to folk, who, quite frankly, I've really never heard of and haven't really looked too much into. And the other one will be Lending Crowd. So, I was a little bit surprised, if I'm being honest with you, that those 2 companies were approved as CBILS lenders. Folk to Folk only has, actually, they don't really list too much of their loan book statistics on their website, which is one of my gripes with them and some other peer-to-peer lenders. But they say they have about 28 million pounds of loan book in hospitality and the leisure business. 65% of their loans are within 50 to 60% loan to value. They had 1.43% of defaults in 2019, with an expectation of 1.5% in defaults in 2020. I don't think that that's going to be an accurate number of 1.5%. I expect that to be much higher. Problem with folk to folk is you got to put in 20K min, which is fine for all you posh high net worth lenders out there. I personally wouldn't want to sink 20 grand into folk to folk. That's just me. The other thing I don't really like about them is if you want to try to enter the secondary market, and I have no idea how good that is because I'm not a lender on there. If anybody is, please leave a comment. I actually don't know anybody that is a lender in folk to folk. Not to say it's a bad company. I just zero experience. But if you want to exit your loans, they have a 0.5% fee to sell the loans. That's called a success fee, I believe. That's how they term it. And then a listing fee of a rather nice sum of £250. So whatever your loan size is, whether it's 20,000 up to a couple of $100,000, you're going to have to pay that £250 fee to list on the secondary market. And then there's a success fee that starts at £60,000 and up. I kind of would like to see that listing fee as a scale. I don't think it's really good that a £20,000 exit is charged a listing fee of £250 as the same of a £200,000 exit, which, there should be a lower listing fee, I think, for a smaller loan size sale. The other thing, I looked at some of their live loans that they have there, because I'm always looking at new places to invest money in peer-to-peer lending, and I just really didn't like the types of loans they were offering. There seemed a lot of land purchases and farm renovations where people are renovating barns and different farmhouses, and the loans are paying 5% to 7.5%. As you know, I've said this before, that I think doing raw land loans are extremely risky. Land is extremely difficult to sell if it goes into default. So folk to folk, maybe they've had good loans in the past, but I wasn't really seeing anything that I would want to sink some money into. And again, there's a lack of statistics on the website. And then we had Lending Crowd. Lending Crowd has a very small loan book right now, only £35 million, and now they've been approved as a CBILS approved lender. I do like, I believe his name is Stuart. I can't remember his last name. I've spoken to him a couple of times. We've had good conversations, but Lending Crowd is a pretty small company. If you figure fees on a £35 million loan book, you got to charge some serious fees to make a profit running a a loan company like that. They also have 6% of their loans in arrears of 45 days or more. One thing I do like about LendingCrowd is they're very transparent about the fees that they charge to borrowers. So if you go and look at their loans, you can see what it says on their website is they charge 4% to borrowers. But when I looked on their individual loans, I saw a 107,000 quid loan at 7.5% fee that LendingCrowd charged, and a £109,000 loan with a 9,000 pound fee. And funnily enough, the £109,000 loan was a higher rated loan with less interest than the one that was it was £107,000 loan with a higher interest rate. So it was interesting. LendingCrowd is going to pause their retail peer-to-peer lending, as we've seen that with Funding Circle also, and they will only be focusing on CBILS loans. Maybe it's less hassle for them to do that because they get funded by the government. They don't have to worry about the BS of peer-to-peer lending. It's kind of a shame for lenders who are in LendingCrowd who are not going to be able to invest in new loans, but they will be able to invest in loans that are on the secondary market. And the other thing I do like about LendingCrowd is they do publish their entire loan book, which I will put that in the description if you want to take a look at their loan book. Since they began, you can download it there. So what else do we have? We have a Lendy update this week, and it's really starting to look like, Liam Brooke is basically, how can I say this in a nice way? He's probably not been on the up and up in many ways, and it's the information that's coming out now just is starting to look more and more like we've been a little bit conned, or a lot of bit conned as investors. So this is the new story this week from the administration update. The Lendy co-founder Liam Brooke has been accused of using misappropriated funds through an offshore company to purchase the collapsed peer-to-peer lender's headquarters. So the money that was siphoned out, I believe, to the Marshall Islands has apparently been used to try to buy the building that Lendy was housed in. I mean, Liam, come on, what are you doing? Really? Did you think you were going to hide this stuff? It was going to come out. The truth was always going to come out. So what else is the news story? It says that the document suggests around £770,000 was channeled from the misappropriated funds to Liam Brooke via a loan to Argo Private Finance Limited, one of the companies involved in an offshore structure to use to purchase Branksmere House. I believe they're in Portsmouth, or Southsea, somewhere like that. The judgment shows Lendy's administrators, RSM claims the two directors misappropriated funds in excess of £6.5 million using fake invoices by making payments for no proper purpose. Remember, it was supposedly for marketing, to pay to a marketing company. Purportedly justified by false invoices and at least 2 service level agreements created after the event. First of all, the alleged dishonest conduct involves deception via sham invoices and payments to offshore companies. And secondly, this is compounded, if the allegations are made out to be true, by the defendants lying about the lack of connection between them and the offshore companies. I think we all know that the offshore companies were directly tied to the Lendy people in control, Liam. And thirdly, the use of offshore companies itself, particularly where that relationship is one which the directors have sought to conceal, can itself be an indicator of a risk of dissipation, and is so on the facts of this case. So basically, they've siphoned off money and they've tried to use it to do silly things. If I have to put it on a very basic level, they've been funneling money out of the company likely, and I think this is all starting to come out. So hopefully justice will be served and Liam will be sent to Australia and locked up. Well, maybe Tasmania would be a better place, or the outback, and locked up there for many years to come. kind of disgusted to read stuff like that. I make a joke out of it, but we've got people that have a lot of money tied up into this company and who trusted what Liam said, trusted my views and opinions. I thought that the Landy operation was legitimate, and I think a lot of people did too, and it's very sad. So hopefully, like I said, justice can be served. The biggest problem you're going to have there is that the administrator is likely going to eat up a lot of the money that is recovered in fees. And RSM has very nice, shiny offices that have to be paid for, and some expensive people who charge a lot of pounds per hour. And that's just going to be at the expense of the investors at the end of the day. But at least, I feel better about the truth coming out. I don't feel great, obviously, about the loss of money. Hopefully it can at least be used as a tax write-off for his investors in the future. But I don't know what we're going to get back at this point, but we'll see. Again, I'll read your comments when I'm done reading out this information that I have and answer your questions. And so pop them in the comments below. Some people like to get off the stream early, so I read the news first and then do that questioning afterwards. Okay, what else? Rate setter. So reports, the things are kind of quiet with the rate setter and Metro Bank deal. What I think is going to happen is probably Metro Bank are going to lowball rate setter and try to pick up the company as a steal, probably in the range of 25 to 50 million pounds. Rate setter, I was actually really surprised about this. Rate setter is preparing for an IPO launch on the Australian Stock Exchange. And Rate Setter UK owns 15% of Australia. Rate Setter, big question is, why would you want to buy Rate Setter shares? If you live in Australia and you're watching this, well, please learn from the Funding Circle share release where it dropped from 400p down to, I think we're at 90p. Last week it was 75p. Fundamentals of buying stocks are a company is making a profit, hopefully, and the growth is there, the stock price goes up. But with Funding Circle, we've seen completely opposite. So buyer beware on Rate Setter shares. I do like Rate Setter. I mean, I hope everything is going to be completed and maybe the sale goes through and we are able to have more liquidity within Rate Setter, which would be nice because a lot of people are still trying to exit and are not getting there yet. But yeah, Rate Setter's having some changes right now, so we'll see what happens. Sale progress on the secondary market. I am still waiting, put in at March 13th for release in the access account. I am number 375,076, and we are about 37,419 this week. 374,419. So getting closer, about 550 more transactions, and hopefully I will see something come out of that access account. The 5-year account, I just think it's going to be a long time before anything is changing with regards to being able to exit. I think I'm 26 or 30,000 places behind where they are right now, so I expect that it's going to be a long time. It just doesn't seem to be moving very quickly with that. So again, if you like to track the releases of the secondary market, you can do that on the peer-to-peer independent forum. Let's see, put that in the, there you go, you can track that. LoanPad, yes, LoanPad seems to be the steady ship in the muddy waters of COVID right now. They are still offering good liquidity at less than 1 day for exit. They have finally topped over the 30 million pound loan book mark, which is quite impressive. I mean, LoanPad hasn't been around for that long, so obviously growing in the right direction. Still have very low average loan to value at 27%. Saw about 40 new lenders come on board last week, 24 loans live, 1 default, 150K, 1 extended loan, 2 loans overdue, average loan size 378,000. And they sent out a news release, as somebody wrote earlier, what's going on with that is the news release said we wanted to provide a further brief performance update. Due to our lending structure and approach, we are pleased to report that we foresee no material issues as a result of the COVID pandemic and associated lockdown. We have extended some loans already, and there may be some others to follow. However, our very conservative loan to value on every loan provides a significant buffer for this eventuality. And it's kind of what I've been saying all along. LoanPad set up in first position beforehand, who was their borrower. Very low loan to values, probably positioned very well to handle whatever COVID throws at the economy. So I'm a LoanPad fan. I am. I wouldn't sink my entire life savings into LoanPad just to get 3.5% to 4%. But for a diversification play, I think LoanPad is great. If you want to sign up, you can click on that. You can get yourself some cash back up to £150 free if you're not a LoanPad investor like I am. One of the downsides of LoanPad is that you do experience some cash drag on your account because there is a £10 minimum reinvestment. Now, interest is paid daily, so depending on how much money you have in your account, you can see your interest continue to rise onto your balance of your holding account every day. But if you want to get £10 interest a day so you can completely erase that cash drag, you're going to have to invest $35,000 at 3.5% to get about £10 of interest. And you are going to have to invest $28,000 at 4.5%. So hopefully my numbers are correct on that. If you're a math whiz and I screwed that up, let me know. But otherwise, you're going to get, I think my account takes about 39 days on average to have enough interest, because I don't have a huge balance in there. So if you want to erase that cash drag, you're going to have to put in about 35 grand at 3.5% and 28,000 at 4.5%. So good to know if you're thinking about signing up. And also, by the way, if you're wondering how LoanPad deploys the money, they do it once a day. So if you're sitting in there watching your money and it doesn't get deployed quickly, that's because they only do it once a day. There was a couple of recovered jewelry loans in the Funding Secure administration this week. And I've always said this on even back when I was a Funding Secure semi fan, I always said that jewelry, watches, diamonds were probably my favorite things to invest in just because of easily liquidated. And we're seeing that now in the recovery. This week, there was a jewelry loan, 100% capital returned and 30% of the interest return. Funding Secure and CG Recovery took 14.2% in fees, but again, 100% of capital is what we want to see in an administration process. Return to investors, I'm not so concerned about interest return, but it was a nice bonus to see that the interest was returned. Second loan was a Rolex and a diamond ring, 95% of capital recovered, no interest recovered, 8% in fees taken from by Funding Secure and CG Recovery. So what you saw there is the administrator essentially giving Funding Secure money and the investors taking a 5% loss. Not the end of the world. And then we had a couple of watches. There was a Rolex and I never know how to say this, August Piguet. Correct me if I'm wrong. I'm sure I butchered that. But 100% of capital return, 33% of interest return. Again, 14.2% taken in fees. Sorry, 8% taken in fees on that one by Funding Secure and CG Recovery. Now, this is why I've been looking at Unbolted in a favorable way, because they are a pawn, PAWN. I do have trouble with that word. It sounds like I'm saying something else that I shouldn't say on a YouTube stream. But so yeah, Unbolted offers pawn loans, and they're very easy to recover. If you're an Unbolted investor, you'll see emails coming through your inbox every week about money being returned through auction sales and money being repaid. So if you are looking for a place to invest where you do want to take some more risk, get a bit of diversity in your peer-to-peer lending portfolio, I think Unbolted is not a bad play. I wouldn't, again, don't invest your life savings in it, but for a diversification, I think it's pretty good. And let's look at my favorite money thing in the segment that I call "Where is my Ferrari?" I invested in a Ferrari loan, and there is still no money returned on that Ferrari loan. I've heard somebody typed in the stream that the Ferrari is actually around, but my question is, why is the Ferrari loan not repaid through MoneyThing? There was a little bit of an update in May 19th. It says, therefore, the other avenues of recovery that are open to us because of the additional floating security and personal guarantees, this is talking about the race car center loans that I think encompasses all of these cars. So yes, the personal guarantees are now crucial to the overall result to lenders. We will not be disclosing these actions as it may prejudice lenders' return positions. To do so would prejudice lenders' positions. While uncertain, and this is in the early stages, if successful, this action could result in a significant capital recovery. MoneyThing, if you think that personal guarantees are weighted, I don't think they're worth anything personally. You're going to chase around these people who have obviously taken the cars and probably double financed them or maybe done some other untoward things with them. So I think your personal guarantees are probably going to be worthless. And my Ferrari still remains to be unsold, so which makes me sad. Because I was thinking when I bought that loan a long time ago, how hard can it be to recover a Ferrari, right? You just recover the Ferrari and you sell it. But obviously it's more difficult than I thought. On to Cufflink. I was looking at some of the newest loans on Cufflink, and to me, not particularly attractive. There was a nightclub conversion, some other things that didn't look that great. And then when I was going through my list of loans, I noticed one of my defaults was second charge property loan. I think I honestly missed that because normally I don't invest in second charges. So it'll be interesting to see how Cufflink handles that and what is returned from a second charge default. Hopefully it's more like a loan extension that they're trying to work out with the borrower. But I don't put any weight on second charges at all, especially at usually the rates that people pay for second charge lending interest returns are just not good. I mean, 7% on a second charge, stay away from it. It's just not worth it. Even 12% I probably wouldn't touch for a second charge. So there's that. LendingWorks, we've had this 90-day additional freeze on investments. Nothing really seems to be happening at LendingWorks. There's no news. The only good thing I can say right now is that I've been able to withdraw repayments that have been coming in, so no new money is getting invested. Crowd Property has been going really well. I'm now auto invested into 12 loans. Again, if you're a manual investor, you're probably going to have trouble putting a large chunk of money into any of these Crowd Property loans because they do fill so quickly. But if you're a smaller level investor who wants to put in a couple of grand on auto invest, I think it's a pretty solid place to be. So I've got 12 loans since June 4th. Yeah, let's talk about the saving rates. I'm sure every single one of you, if you have a savings account, has seen that the rates have been cut again. We said this last week. I think most of mine have been halved at this point. I'm still getting 1.2% on Ford Money because I got in at a promotional 1-year rate. But that's closed to new investors now. Marcus has a 0.7% interest rate on their account, but you got to be in it fixed for 12 months, so you can't get out. I mean, rates like this are making companies like LoanPad look more attractive, and you're going to see these rates drop. The average savings rate right now on an account is about 0.25%, so 0.25%. You can score yourself a lovely 7-year bond through the Bank of the London and Middle East. I don't know what that is, but if you want a 7-year bond, you can lock yourself in at 1.7%. And the NS&I income bonds, thank you. I think Pauline on the group first notified me about this. They're offering a bond of 1.6% Sorry, let me rephrase that. 1.16%. You can take your money out without notice. I believe that's a monthly bond, and they do have a direct saver account at 1%. Yeah, so interest rates are crap. Personally, it depends what your goals are. If you have extra cash, and I don't think there's anything wrong with bunging it in the stock market at this time. Maybe picking out some high-paying dividend stocks. Dividends are going to definitely reduce on stocks, but at 1%, you have to be very careful with inflation eating up your money, because it will. It depends how risk averse you are. I'd rather have very little money sat in a savings account and shove it into my trusty index trackers. And I don't have much faith in savings accounts, and nothing's going to change for the next 6 months. Next week, too, for the stream, what I found this old stock report. This was something that I had completed for my mother by a company called Bruin Dolphin. This is dated April 2015, and it was a report of different stocks and funds that they recommended. So I'm going to go through all of these funds and see how they performed over the last 5 years versus my old index trackers, and see if this company, as a professional money managing company, recommended good things or bad things. So that'll be the topic for next week's stream. So that's what I got for you this week in the news. One other thing I said about the stock market, why it's been absolutely disconnected from what's going on in the economy. I mean, look, the economy's just crap. Let's face it. I don't think it's any better in the UK. In the US, I read a lot of US financial reports because the world stock markets are really tied to the US markets. And what I'm noticing in the US is, I read a report this week that one of the largest franchisees of Pizza Hut and Wendy's, which is a fast food restaurant equivalent of Burger King, they had over 1,200 franchises of these fast food restaurants. They filed for bankruptcy last week. So if anybody thinks that the economy is good, it's not. And the stock market is wholly disconnected from the economy. It's being pumped up by the Fed in the US and by the UK government buying bonds. But it may well just continue like that as long as the governments continue to prop up the stock markets. They can't afford to see the markets fail, and you may just see the stock market sort of wiggle side to side for a while with some volatility. I'm still buying. I mean, I buy on the dips when there's a decent sized dip of a 1 or 2+%. But what I believe is that there's a group of investors out there, and if you haven't read this Reddit, I highly suggest going and checking it out because it's quite funny. They're basically a 1.3 million gamblers in the stock market on this. I'm sure not all of them are active on this Reddit stream, but you can go read some pretty amusing losses and win stories about people that are gambling on options through stock trading apps. Like in the US, they have an app called Robinhood, which gives free trades, so these people can buy stocks and sell them without fees. And they're basically gambling on options, puts and calls. So maybe they're what's keeping the market floated. I have no idea, but it seems like a disconnect is definitely there, and that Wall Street bet community is quite large. So maybe they're the reason why the stock markets are so volatile. But yeah, have a look at that. It's quite entertaining. I like it. So I'm going to go through your comments. That's really about what I have for the news this week. And see what you have. What can you shine on the peer-to-peer world for me? Because I don't always get all of the news, and I like to read your comments. So let's see. Chica Boy says, I'm thinking of investing in crowd property. What do I think of them? So yeah, I promise I'll be releasing my crowd property video this week. I've done a walkthrough of how to use the platform, and then I show you how the live loan process works. So I will be releasing that this week. I mean, so far so good, Chicken Boy. I don't have any long-term experience with them, but I've been watching them for a while, and I like what I see so far. So they seem to really know what they're doing. Hi, Brian from Woburn. Nice to see you. John Day said, be interested in views on blend, loan flow, section market, cash withdrawals, auto lend, and any negatives. Yeah, blend. So I've mentioned, if you've been here before, I like Jan Murciano. Blend, he's a very sharp character. Some of their interest rates on the deals are quite high. So there is some risk. You're not going to get 10, 11, 12% without taking risk. But as far as his risk analysis on deals, it's very good. There is £1,000 minimum on each loan. So if you're a smaller net worth lender, you are going to have to keep that in mind. But yeah, I like Blend. They do a lot of properties in Northern Ireland, at least they have in the past. So you do have that again as part of the risk. I don't have any experience with the auto loan, but as a whole, Blend would be, if I had access to extra money at the moment, I wanted a peer-to-peer lender, it'd probably be put into prop lend and Blend. Hi, Mark Ashford. Nice to see you. Welcome to you. First time on the stream. Glad you're here. Oh, yeah. So Mark Ashford saying on your website, you're going to have a review of Bondora up soon. Can you give us a little preview? I saw their website and their go and grow option seems appealing. Yeah, I was working on a Bondora review on what happened to all of the Estonian non-UK peer-to-peer lending companies that ran into trouble. Really got me to thinking about, would I invest in Bondora? And I got to be honest with you, right now I'd have to say I probably wouldn't invest in peer-to-peer outside the UK due to the lack of regulations. I mean, yeah, they offer some really high interest returns, which if you're okay with the risk and can stomach that, sure. And there's a good saying in investing that everything's good until it's not. We've seen that with some of the peer-to-peer lending companies in the UK that have had problems, right? Everything was good until it wasn't. So if you want to bung a few percent of your net worth or of your entire peer-to-peer allocation into Bondora, sure. I used to invest in them a long time ago, and I just had a lot of problems with defaults. I could imagine that right now I probably wouldn't touch Bondora, just because what's going to happen in Europe with the defaults is going to be, I would say, probably worse than what you're going to see in the UK. So I think you're going to see those default rates rise. And is it worth taking a risk to get 12, 13, 14% when you having to deal with a lot of defaults? Personally, I'm not into that kind of risk at the moment. So that would be my 2 pennies worth on that. Hi, Norman P. in rainy Sussex. Nice to see you here. Thanks for joining the stream. Yeah, so Mr. Smith, I haven't heard anything about assets removing their 0.9% annual management fee. Hopefully that will end soon, but at the moment they're keeping it. Philip says, update. No water up here. That's the problem this week. Upbeat update from LoanPad today. New loans coming soon. Yes, LoanPad seems to be doing well. And Norman says, remember, there's a 1% charge to withdraw capital from Lending Crowd. I agree. Norman says, do you see us getting any more money out of Lendy? Administrators seem to be taking all of the money. Yeah, I think you'll get some back. I don't know what the percentages are going to be. I'd be surprised if I were to get 50% back of what I have outstanding. We'll see. Mike Powell is one of the people that works on the Landy Action Group who's on the stream tonight. He probably has a lot more in-depth information about Landy. If you want to throw in a comment on that, Mike, if you haven't already, about what you think the percentage returns are going to be. I mean, that's really highly dependent on what loans you're invested in. Some of the loans are probably a lot worse than others. So John says, but he thinks 40% at best. I agree. I think maybe 40 to 50%. Mike says, anyone seeking to join the Landy Action Group, please make sure you read and answer the questions. A lot of people seem to not and get rejected. Yeah. Just like when I was in school and I would ask the girls out, I would just get rejected. Don't get rejected. Read the questions. Alan says, I've been able to exit over £1,000 from RateSetter by following your tip to set the lending rate at 8%, slow but steady withdrawal method. Yes, that's true. By the way, if you don't know about this is a little hack about RateSetter. If you have money invested in the Access account, you can go ahead and set your rate at 8%, as high as it will go. And what will happen is when you get paid back, your money won't get matched because it's a very ridiculously high interest rate. And you can go ahead and then cancel the orders on those Access loans and you can get your money back out straight away. So just a little hack tip there. I think that's worth a thumbs up just for that hack tip. By the way, when I went to RateSetter and I asked them, they actually were the ones that told me about that little hack. And they said, please don't write about it because it's not what it was designed for. But, I'm still going to write about it because I want you to know about that. So. Gary says, my only issue with LoanPad is I always seem to have 70 to 80 pounds uninvested sitting as cash awaiting investment. I don't know, Gary. I haven't had that problem. So depends how much money you have in the account. Agreed, Mike. Yes, you're right. That's a caveat. Tell that to Collateral who offer jewelry loans. They screwed those up. So, but honestly, when I was buying loans through Funding Secure, I always went for the jewelry loans over the property loans, and I'm glad that I did. I still had some invested in the property loans, but being that my dad was a jeweler, I sort of understand how easy it was to liquidate. Let's see. Yeah, and if you do have money sat in your account, LoanPad, Gary, send support an email. They're very quick to respond, and they'll probably tell you why. But I haven't heard of anybody else having that issue. Unless you have a stupid amount of money in there, like £1 million. Maybe they can't invest it for you. But then 70 to 80 pounds wouldn't give you $1 million, would it? Yeah. Just ignore that last comment. Annabelle asks, what is a second charge? So a second charge is a security position on a piece of property. So when a peer-to-peer lender gives money to a borrower, they take a charge, usually on the property that they're loaning money on. First charge means you're in first position in the event of a default and that property is liquidated. Second charge means you're in second position behind anybody that's in first position. A lot of the times you'll see banks in first position, and then if there's any equity left over, people can take out second position loans. But problem with that is, let's say a property is given out at a 70% loan to value. So 70,000 is lent on a property that is valued at 100K. Anybody in second position, say that property is fire saled at 70,000, there's going to be nothing left for the second charge holder. So that's why I don't like second charge positions on loans. Keith asks, what are the queues like to get money from assets? Keith, maybe somebody can answer that for you. I haven't tried to withdraw anything from this, so I don't know what the queues are like at the moment. Mike says, have I read the latest admin report on the race car RCC? That's what I was talking about with the Ferrari. Looks a bit better as there now appears to be an intercompany loan to assets exchange that seems to offer better prospects. I'm not quite sure. I'll have to read it, Mike. I haven't read it. Maybe you could tell me where I can find that. So Mike says the Ferrari proceeds are part of the general secured creditor pot. The separate charge doesn't seem to ring fence it. But I want the Ferrari. I just so annoyed about that. Aki Jabby says, question from the missus, how is the new pressure cooker going? Yeah, not really finance related, but last week I finally broke down my cooking is terrible, and the love of my life said, get a pressure cooker. So I bought a little pressure cooker called an Instant Pot, which is a Canadian pressure cooker. And it went really well. We experimented. Some things didn't come out very well because pressure cooking is not that easy, apparently. You've got to get the water ratios correct. But I ended up returning it because it was too small. I bought the bigger version. So today I made some dried beans and I cooked them for too long and they were too soft. But I'm learning. So apparently you can do all kinds of things in a pressure cooker. I had no idea. It's just fun. Pressure cooking's fun. If you don't like to cook, I don't know why, but using a pressure cooker, you get to press the buttons on the front and hit the little steam release. And yeah, so I'm a fan. I'm kind of addicted. When I sent the small pressure cooker back, I didn't have a pressure cooker for a day, and I was really sad. I was missing it. Mike says Zopa Bank starting to look attractive. Yeah, I don't know, Mike. We'll see. We'll see what the rates are. Colin says Tesco Bank now at 0%. Yeah, like Barclays and a lot of those. Thanks for the correction, Mike. I'll definitely take a look at that admin report. Colin said Tesco had to think really hard about lowering their interest rate. Yeah. Mary Cowling says, any views on capital stackers? I've read they are very safe, well managed, but rates are high, rates are high 10 to 16, and according to loan to value. Well, I don't really understand how something could be safe when they're paying 16% interest. Maybe somebody else has a view on that, but just remember, if you're getting paid 16%, the borrower is usually paying higher, or maybe they're taking capital stackers are taking fees on the loan itself, and they're giving you what the borrower is paying. The problem is a lot of peer-to-peer companies, we don't know what the spreads are because a lot of them don't publish that. So maybe capital stackers do publish those spreads. But if you are paying they're paying you 16%, I don't think 16% and safe really correlate together. So, but I will take a look at them for you, Mary. In the interest of finding new places to invest, where's my pen? Here we go. You put it on the list. I know Fourth Way seems to like them, but again, 16%, even 10% doesn't say low risk. Oh, there you go. So Norman says capital stackers are all second charge loans. There you go. Second charge is not very safe. I don't see how it could be. We'll see. Scott, a bit late. Missed your news. Sorry, Scott. You have to rewatch the stream. I'll give you a quick recap just for you. Assets Capital is doing okay. They say that there hasn't been too many defaults and everything is bouncing back. But past results do not indicate what future results will be. 2 new CBL ILS lenders, folk to folk and lending crowd, have been approved by the government. Liam Brook has been accused of using misappropriated funds through an offshore company to purchase the collapsed peer-to-peer lenders headquarters. So he's been a naughty boy. Hopefully he will get some cuffs on his wrist. Let's see. RateSetter, not much news. RateSetter Australia is going to launch an IPO on the stock market. LoanPad appears to be doing good. They sent out a very positive update. Funding Secure has recovered the 3 jewelry loans, resulting in most capital and interest being recovered. My Ferrari is still missing from money thing. Cufflink is still releasing new loans. Be wary of second charges. Lending Works, we still have a freeze on them. Nothing's happening, but you can withdraw money. And Crowd Property is going well. So that's Scott Peacock's private update. I won't do that every week for you, Scott. That was just a one-time thing. Alan says you need to have £1,000 sitting in Blend to access auto lend, which can be there for a while waiting for a loan to appear. Yeah, that's one of the downsides. Chica Boy says, thank you. I'll wait for your podcast before I decide to invest. Chica Boy, that'll be a video. I like Crowd Property. I have no problem my money being in there right now. Gary says Blend loan flow is very slow. Norma says, Chica Boy, be aware that your money can hang around on Crowd Property. I've been with them for a year now and all good but slow. Yeah, so problem with them again is if you're using Auto Invest, you're probably only going to get about £50 into each loan. So if you're looking to invest quite a big chunk, it's going to take you a while. Alan says, I prefer Crowd Property to Lend these days. Not sure what that means. Mike says, yeah, how much you're going to get back from Lendy will be totally dependent on which loans you're invested in. Crowd Property manual investing is possible if you are quick on the keyboard trigger, and you do need to invest £500 on each loan. So keep that in mind. You just got to best to be online before 10 a.m. when they release their loans. Peter Jennings says, will the marketplace exit on assets mean you'll be forced to give a discount if you wish to withdraw money, as these will be what I'm in? No, you won't have to be forced to make a discount on your access loans, but probably what's going to happen is you'll be in competition with people who are willing to take a discount to exit. So likely if you don't have a discount and everybody else is discounting, you're not going to be able to exit. Let's see. Chica Boy says if he had £1 million, he would set up his own peer-to-peer company. Chica Funds. Yeah, I don't know. I don't know if I would invest in your peer-to-peer company. I might throw a few pounds in to support you, though. We'll see. You're welcome, Annabelle. Hopefully you understand the difference between first and second charges. Paul says, is the Bank of Dave still operating? Yes, I believe they're under a different name, but I think it's still out there. Norman says, assets queues seem to be long. I've asked for many thousands back, and I've been getting 500 a month. I mean, hey, 500 a month is better than nothing, right? Thank you, Chica, for the thumbs up request. As always, please, if you're enjoying the stream, hit the thumbs up. If you have questions, pop them in the stream. Chris says, I'm rate setter. Where do you find out what number you are in the queue to exit? Yeah, Chris, if you go and look at your release loan pieces, it'll be on your main dashboard and it'll give you a reference number. It doesn't have a queue, so to speak, but you can tally that reference number against the peer-to-peer independent forum list where people list their reference numbers and the ones who have been able to exit right what their reference numbers were. So if you look there, you'll be able to get some kind of a rough idea of where you stand. John Elston says, regarding LoanPad, I'd have thought everyone would have the same proportion of cash awaiting investments in their loan book. Mine is currently £760 on a £10,000 loan book. So, well, yeah, I would imagine, John, if yours is 760 and Gary's was about 75 to 80 pounds, that, and he has £1,000 invested, that sounds about proportionately correct. But I think you'll see new loans coming soon anyways, and that will disappear. Tony said, please remind investors in grocery to claim their sign-on and refer a friend bonuses. I got all mine this week at £200 a time. Okay. Tony, how did you get that? How did you claim it? Did you have to write to them? You're welcome, Scott. Annabelle in Rate Setter, she asks, where is the option to raise interest rates to 8%? I have about half sitting in a holding account. So I'm hoping I can get that out using the hack. Well, you can remove anything that's in your holding account now, Annabelle, but if you go into Rate Setter, you can set your own rates. What I'll do is make a video. I'll try to get it done tomorrow. And if you can't find it, I'll pop it up on the YouTube channel on the next day, and I'll show you how to adjust the rate. So you're going in and setting your own rate under the option that you can on your Access account, and then just put it at 8%, which is the max. So let me write that down. I'll get that video for you because it's important. It's important to know how to do that. But yeah, you can get your money out of your holding account now. You're welcome, Mark. Glad you're enjoying the information. Okay, so that is it for this week. I don't think I have anything else to share with you. Next week we'll be back at this time. We're going to do a 7:30 start time every week now on a Thursday evening. And next week again, we're going to be talking about this financial advisor and their stock fund picks that they gave my mother about 5 years ago, compare it to how the index trackers are doing today. But thank you for joining. Please, again, hit that like button, subscribe to the channel, and hope you enjoyed the stream. I'm glad each and every one of you were here, and I appreciate your time. I know that you are very busy people with things to do, important places to go. So the fact that you come and sit here and listen to me ramble for an hour, which, by the way, is not easy to do. A quick update. I know I've talked in the past about having other people on the stream, and I do plan on doing that. Right now, it's more of a technical issue that my computer will not run the software in order to do that. So I'm going to be updating the Office Mac. Hoping that there'll be some new iMacs out in July, and then I'll go ahead and get a new iMac, and I'll be able to bring in guests on the stream as I promised. So I didn't want you to think I'd forgotten about that. But yeah, so that's what's going on with that. But everybody have a great night. Be safe, be healthy, be happy. There's more to life than money. Remember that. Enjoy your life, and I will see you next week. Thanks for joining. Bye.